Welcome to section 5. This is going to be when we dive into the technical analysis. So let's dive right in. This is going to show you how to use technical indicators, chart patterns, and other tools to make your trading decisions. Lesson 1, we're going to cover the basics, and then we'll go into just keep diving deeper as we go through this section. So the introduction to technical analysis, we have line charts, bar charts, and candlestick charts. We're going to be mostly using candlestick charts. Well, 90% of the time we'll use candlestick charts, but we will use the line chart when we are comparing other, like if we put the dollar on the E-mini S&P, or if we put the dollar on the Euro USD, we'll use that as a line chart overlapped on the main candlestick chart we are looking at and trading. Basic concepts, we've already covered these: trends, support and resistance, volume, which we could go into. I'm not a big volume trader. It may help on smaller stocks, even bigger stocks, but mostly the penny stocks and stuff like that increase volume rockets price. And then time frames, where we go from the high time frame down to the lower time frames. And tools we already started dabbling in were the moving averages, oscillators, which are, I'll show you on the charts. Easier to see what they do rather than just talking about it, but trend lines and chart patterns. So we already covered moving average, trend lines, and a little bit of chart patterns. So we'll dive deeper into that in this section. Types of technical indicators: trend, momentum, volatility, and volume indicators. So trend indicators, these indicators help traders identify the direction of the trend, such as moving averages, MACD, and Ichimoku, Kinko, Hayo. Just pretty much the Ichimoku cloud. We did dive into that earlier, but some people use it. I don't really use it, but we will cover it just so you, if it speaks to you, you're able to put that in your trading strategy. Momentum indicators. So this is where the oscillators come in. So we have RSI, stochastic oscillator, and then the Williams %R. These are basically, they measure the strength of the trends and potential reversal points, but they don't always mean that. So use them as a get ready, watch out, rather than when it hits here, let's do buys or sells. Then we have the volatility indicators. That is where we get the Bollinger Bands, average true range, and Do-Chin channels. Probably won't cover those, but if you want to learn more about those, you could research them. So these help traders magnitude the price fluctuation. Most people are going to be using the average true range, which is the ATR for short. And now it's going to show you the average movement that's been happening in the market, so you know kind of general how big the move's going to be. And then Bollinger Bands are kind of like two lines with a median point, and then price usually bounces back and forth through them, but not always the case. It's just a good indicator where price is going and how far it's been moving. And then lastly, we got the volume indicators. These are unbalanced volume, the Chaikin money flow, and volume weighted average price. That is what we use the most here, is the VWAP. So you'll see a lot of that in this course. Don't really use any of these, but just wanted to give you guys some options and examples of these type of indicators.